The gentlewoman from New York, Mrs. Maloney, who is also the chair of the House Committee on Oversight and Reform, is now recognized for 5 minutes.
So much, Madam Chairman, and I thank you for holding this hearing, and I thank you for focusing on the need for more housing. It is a persistent problem, the affordability of housing in my own district, and I would say in my city and my state, and clear across this country. And interest rates, I would say, have the raising of interest rates have worsened affordability for home buyers and homeowners, and I would say even renters. For example, between April 2021 and April of this year, mortgage rates increased by nearly 2 basis points, and the median home price rose by over $50,000. And the monthly cost of home ownership, which includes a monthly payment on a 30-year mortgage, property taxes, property insurance, mortgage insurance, grew by at least $500 a month, but in some cases in metropolitan areas, it's grown by over $1,000 a month. So I would like to ask Dr. Zandi, an economist, whether raising these interest rates contributes to the increased cost of housing for homeowners, which is a goal of most families, and renters in this country.
Well, thank you, Congresswoman, for the question. Yes, clearly it does. I think your statistics, strike that point, quite clearly. I will point out, though, that to a significant degree, this is by design. So the Federal Reserve is working hard to slow the economy's growth, to quell the wage and price pressures. And the most rate-sensitive sectors of the economy are going to suffer the most as a result. Housing, single-family housing, is the most rate-sensitive sector of the economy. If you want to buy a home, most people have to get a mortgage, and thus the rate sensitivity. So this is, unfortunately, this is by design. But it does, bring up the broader point that housing affordability is going to be a long-term issue, even when we get to the other side of this, and get inflation back in and interest rates back down. And home ownership is going to be under significant pressure going forward. So it's about supply in the near term, but I do think longer run, we also have to think about ways to improve affordability for lower income disadvantaged groups, and demand side policies will become more important at that point in time. But in the here and now, the reduction in affordability is by design. The Fed is working to slow the economy's growth, and they're doing it by hitting the single-family housing market very hard.
But there would be other ways to address the inflation that's in our economy. I would venture to say housing has not caused the inflation in our country. It's more caused by the war in Ukraine, the war in Afghanistan, the disruption of our supply chain. And it seems, why don't we address those causes as opposed to attacking housing and the affordability of housing? I would like to ask, I'm concerned about the impact it's going to have on my constituents and other Americans to be able to afford a home with these interest rates going so high. We have a 30-year mortgage. My question is, could we change our policy to have a 50-year mortgage and possibly alleviate some of the pressures homeowners face in making their monthly payments? And I would add that this housing inflation affects renters too, because when the mortgage goes up, then the rent also goes up. So I would like your take on changing it from a 30-year, which is really the standard that we have in America, to a 50-year mortgage for 50 years, so that you could lower the rate and allow people who are confronting really constrictions in their income to afford home ownership.
It's an interesting idea. I would say the United States is very unusual compared to every other country, except with a few exceptions, to having the 30-year fixed rate loan. Most countries have much shorter mortgages. They adjust immediately with market interest rates, or 2-year or 3-year or 5-year. And that's because of Fannie Mae and Freddie Mac. Fannie Mae and Freddie Mac allow for the 30-year fixed rate mortgage to be the bread and butter mortgage in the United States. And right now that's insulating homeowners from this run up in interest rates. I don't know that a 50-year mortgage would advance the ball, Congresswoman, only because the typical American household lives in their house for no more than 10 years. So very, very few people would actually live in that house over that period of time. What I would, though, I'd throw out another idea, assumability of mortgages, right? So you get a mortgage at a low mortgage rate, and when you move, you can take that mortgage with you. FHA has some mortgages like that. That might be an idea that would be very helpful in helping insulate the housing market and homeowners and improving affordability in the longer run.
Thank you. My time
very
has
much.
expired.
The gentle lady's time has expired. The gentleman from Missouri, Mr. Lukemeyer, is now recognized for 5 minutes.
Thank you, Madam Chair. Mr. Olsek, the administration is considering